Hey guys, good morning. Gonna do some chart review. This is Crude, and I wanted to show you that the Globex 1 has been a great location to come in and hit this market back to the upside. That's the lower Globex 1. So basically, all week they have been coming in at the Globex 1, the lower one. Today, though, we didn't make it down there. It missed it by a little bit. And right now, the upper Globex 1 is holding resistance, but we've got 81 ticks, 81 cents for the Globex range, the 68%, which are two standard deviations of the Globex range, 68% right there. So that would be just at the daily one, just a little bit above it. So I'm thinking maybe a pop and drop back into this Globex range um, to start the open. And if the pattern holds, it may come back to hit this lower Globex 1 because we didn't hit it. I don't know. Or it's just going to take off. I mean, they're anticipating a much higher energy prices, but right now the range is contracting and it's starting to roll over. So we never really broke out of a high range to give a comparison how you can compare this. So you can look at a previous Globex range and see where you were going into 8 a.m., which is the 9:30, 7:30, 8. So they were selling it off here, but you can see we were much higher than we are currently. So the range is much contracted today compared to the prior. It's more like this, staying inside the range. We're way down here. Let's put a line so we can compare it. So you can see how that stayed inside the one down here under this low part, all inside the one. And that's how you measure volatility. If it's low, you're going to stay inside the one, right? And if it starts rising, that slope, this is the part that we like to trade, right? Because then it's moving, it's doing something, it's moving out of its range, and you have an opportunity to make money, whether it's long or short. You just want to have some expansion, some volatility, so that you can come inside that volatility with your strategy and try to capture some profit. It's very hard to capture profit consistently when price is rolling over on top of each other like this, just up and down, up and down, up and down. It just cuts you up, cuts you up. So we want to be slope riders, right? Okay, so that is crude. Um, Overall for the daily range, 119. So if it was the low, you can measure 119 up to get an idea of where it might go. And that would be right about that Globex 2, just a little bit above it. But you can also conversely put it down from the high, right? And that would be the lower Globex 2 giving us a double bottom. So you just have to, game theory it out using your range. I like to use the second standard deviation to do this. If it's very low, if it's inside the one, if it's very, very low vol, I mean, don't even bother, right? Who cares? But if you want to see where those twos are on those higher time frames with that slope rising, you know where to try to reach, up or down. So you would either go to the Globex 2 up or the Globex 2 down for this range today so far. Okay. So for let's do a chart review for equities because we are fixing to go into the end of month today. Today's, or yeah, I think today, yeah, it's the 31st. I never know what day it is. So here is the quarterly contract. We'll come back to this in just a second. Let's pull up the 30-day, and you can see that we are in the middle of the 30-day range for ES. So they threaded the needle and put us right here in this 30-day range, right there. Now, there's more than one way to figure all this out. This is one way, and this is just using the PT indicator, and you can put 30 days on here, just like that. And another way to do it is to put the 1 month. So the monthly will get us a different distribution because it gives us the calendar days in the month. Trading days in the month. Trading days. There we go. And so now you can see that we had resistance. That's what I was saying. We had resistance. So now we have support, resistance, and we're right at the middle. So that, I think, and that's why I'm bearish. I apologize. You can't be not bearish with this macro, right? It's insane, right? Every negative headline that comes out, we're like laughing and saying bullish, right? Because the market only seems to go one way. It is it is hysterical. But the party does end at some point, and these are the sweet spots that we're trying to find. So obviously we're at this conglomeration of support resistance over here. So it looks like it might be a good place to consider, you know, taking profits if you're long and waiting to see what happens. But if you're short, maybe you want to wait till it gets back below 4,500 and just see if they zipper it until the end of the day between 4,500 and 4,530. The daily range is for the PT1 is 1850. So if we stay inside the 1 day range, inside the ones right here, see how low it is inside the ones? See how low that is? 3725. I mean, what I'm trying to say over here is it could theoretically just zipper it between the 38 and the 4500. So you have a daily range right there between 38 and 4500 that matches the daily range, 68% of the daily range, and it's inside the one. So that's 68%. There is a number that you want to be aware of when you're inside the one. When you're outside the one, you will be looking at that 52 points, and the 1850, the PT1, you can use that as a like intraday reversal, you know. So you could, say that I would want that 1850 as a reversal potential. So let's see what that looks like. 17 right here. Look at that. So that was within the 1850. And then yesterday, once you get to 1850, you could be looking for reversals. And waiting for a white candle. You know what I'm saying? And then, okay. But let's go back to that 30-day range. And look at our monthly levels, 140, 280, 391, and we can see if it's already met the range. So the month of August, from the month high to the month low, 210. So we have room to run to get to that 68%, 280. So if we were going to measure from the low, 4350 plus 280, 4630. So that's way up there, and that's not going to happen today. So we got short change between the one and the two. Didn't even reach the 68% of the range. So that is another reason to believe that this market is just flat. And I'm going with my 4500 to 4530 unless the PCE comes out and it's dismal or something like that. The way that they've been printing these economic indicators lately, my guess is they're going to make it, dead spot on, maybe one tick away from it or something like that. If it's one tick away from it, flat, flat, flat. If it's, of course, if they want to move the market down, it'll be a big miss or it'll be a big plus. They'll make it really hot to get the market down. All right. So going back to this quarterly, the silver lines, these two are the JP Morgan. There's your call wall, the collar. That's the upper collar, and here's your lower. Um, so there's your sold put. There's your sold collar, a call, and this is where they wanted the market, right? They were perfect almost. So my guess though is this lower level down here. There's my quarterly three. Just below it, this green line is the JATS quarterly three. My guess, and that is 20% off of the July high, or the August high, whatever that is. August high, late July, early August, late July high. So 20% would be, around this 3700, 3707, something like that. So 3684 is right there holding support at the 20%. Below it, this line here is the JP Morgan put. That is their purchased put. They bought a put. So we know for a fact, 100% that the market is not going to go below 3550 because the bank does not lose. So I would say that they're going to be catching the market at this quarterly three, which is 20% ish, and then bring it back in before September 30th. Now, is that in the realm of possibility? So we would be able to tell how far out it would be by putting up a higher time frame, 90-day level. So 598.50. So if we took the ruler and go 598.50 from the high down to here, that's 906.75. So that's 300 points more, right? So 600 is right here, 598. So that would get us right to the 3-month one on the open. Right down to the 3-month one. And The problem is, like I said, is once this one right there, this one is the 90-day one on the open. And that's where JP Morgan has their sold put. So they have it just above it. They have it at 42.10, and my 90-day one is at 41.94. So that's above it. And that's a sold put. So if it breaks, right? If they break it, that means they're selling. So they'd be selling that and they'd be selling that. There is no support. If they are short, they make money by going short at that point. If they break the call wall, they have to go with it and go long. That's how it works. They'll be hedging below that line all the way to their put line at the quarterly 3. So we'd be breaking the one there. That's why I think this one is going to break also, and it will just fly down to the 20%. If they're going to get that 20% correction, get it out of the way before the Christmas holiday. So whether it comes, September 30th or not, I think there's an excellent chance that by September 30th, I'm not talking about today or, September 30th, I think that we could see uh, this definitely the 600 level, 4036, and I think that will break because of the position that they're sold put is. So let me know what you think. Let me know if my analysis makes any sense. So once this one breaks, because that's normally support, but if they're selling it because of that collar, then they're going to sell it down to their put wall and then bounce it. They're going to make a shit ton, right? They're in the business to make money. All right, so I've got a 60-day distribution, which looks interesting. Caught the support. And here's your monthly, which looks very, very interesting. 45.38. I've got a 20-day. You can create these however you like. And if you're setting these up to sell premium, I was mentioning this yesterday in the trade room. I set these up so that we can hit the line. I'm not looking for top tick or bottom tick. My targets are meant, I try to reach the target. So I set these up so that we reach the 1, 2, 3. I'm giving us a little bit of alpha edge on that. And in order to be able to reach it. So I expect that the levels most of the time will, exceed just a little bit and come back in. They could just bounce on the level, and that happens a lot too. But so if you're selling premium, give yourself a little bit of tail. Don't ever just sell premium on the line because you'll get tagged if it's going to be coming to challenge that edge. So always give yourself a little bit of room on top of it and use your first tail or something like that to sell your premium to be safe. Keep it away. And the same thing for risk if you're doing it, to trade, um, using these for support resistance. Don't just use the 3. Use a tail so that you're not, you want to not be hit. All right. So you can set these distributions up many different ways. Um, and you can, set them up so this is a 7-day, for your premium. See how they nicely fit these boxes when they're running. A 5-day, 1 day. Here's a 7, 10, 20, 30-day spread to give you an idea if you like to sell premium. what that could look like. So it makes it really handy to see. And I hope this would give you an idea if you're a futures trader too, because when they do hit these lines, that is a great place to engage the market for a reversal, long or short. You see what I'm saying? Okay. The Globex is a great distribution. Like I was just telling you in Crude, I love the Globex distribution. It works on just about everything. So the market loves Globex. Loves, loves, loves. So always pay attention to Globex. So you can put the Globex distribution on the chart a little bit different than you do the higher time frame. So instead of choosing the higher time frame daily, you would uncheck that. You don't want that. You want the upper one. So you can have one or the other. You can't have both. So use higher time frame and then you match the period of time that you're interested in. For the ES at 1700 to 8:30 Chicago. I have my computer set up to Chicago. So whatever time Chicago time matches your time zone, that would be what you would want to do. So I set my computer clock to Chicago no matter where I am in the world. Um, and it just makes it easier because all my trading templates are set up for this. Um, so crude would be 1700 to 8. The VIX would be 2:15 in the morning to 8:15. So just make sure you understand what your Globex range is. They're all different. Okay. And then the algos will adjust to that range. But they really, really, really like Globex, all the markets. And you get some wonderful bounces. Okay, and here's that 5 minute opening range. Now this is different than just a 5 minute range. Um, a 5 minute opening range would be when the market opens at 8:30. Um, you would know where the 1, 2, 3 is. And this doesn't look like it has a 1. Looks like it's a little bit retarded on here. What happened to my levels? 8:30 to 8:35, and I've got them. That's why, because I've got them blue. This doesn't make sense. Let me reset this. I play around with these so much. And what I want to do is go back in here and make this 8:30 to 8:35. And then for this one, I don't even know what that is. I don't know what that is. Take it off. I want to put a 5 minute PT3 and tails on it. So I have another template that I can set up, just PT3 with tails. And change this to 5 and put it on, yeah. So there's our tails. Five-minute is pretty much the narrowest range that you would want to use. Just a second, it's still calculating. Okay, yeah, so sorry about that. Got it set up. So here is the RTH open, and you can see the 1, 2, 3 here. The white is the 1, the little 2, and the 3, and that acted as resistance. It came back and then powered through the level, broke the 3, went to the first fib, and then went to the 5 minute 3 with this little fib zone and pulled all the way back. So it's very algorithmic the way that this market works. And let me put these on one at a time so you can see it. So here is just the 5 minute 1, 2, 3. One, two, three, and then break it and go to the first target, and then try to get to the second target. And how this works, it works on all distributions, is you measure from the middle of the range at the open, right? And measure to from the open to the, oops, let me try this again. A little bit hard to, I froze up again. Oops, yeah. This is freezing up on me. Hang on for me 1 second. There we go. Measure from the middle of the range to the end, the three. And then you can go outside of it one time. That's your first fib. And then I put the middle of that, the mid-range, and then do it again two. Um, so one time is from the mean to the three. Two times is from the three to the three. So if I measure three to the three and then go outside the range, that's your two times, right? So these are algorithmic levels that the market would like to trade in on a regular basis. So I can show this to you for previous 1, 2, 3s. So here was another RTH open, and you can see it made it to the top level and then came back all the way through. It's a big range for ES. Must have been a report day. But normally, and here it broke out of the, and this is just a 5-minute range, guys. Um, if it breaks the range, I like to look at a 60-minute range, right? 60-minute opening range, and do the same thing with my 1, 2, 3s. Um, if it's going to stay inside or break out. But you can set these templates up to mirror your ranges and know the targets to trade to. And here's a 60-minute range with the daily three. Daily, you know, and I recommend that you use a 60-minute range with daily levels or RTH levels. So that'll conclude the chart review for today for ES. Um, Definitely come to the website and check out the PT indicator for NinjaTrader, and consider getting a subscription. If you don't have PT indicator, uh, if you don't have NinjaTrader, sorry, then you can get Excel files sent to you of the levels in the morning. Okay, so we get you covered one way or the other. Thank you so much, and y'all have a great day.